Is Bitcoin the future of finance or just another bubble waiting to burst? This is going to blow your mind. The year 2025 has unmistakably ushered in a period of intense focus and debate surrounding Bitcoin and the broader digital asset ecosystem. We stand at a fascinating crossroads, observing how these innovative technologies are reshaping conversations about finance, investment, and the very nature of value. The once niche interest in cryptocurrencies has now permeated mainstream consciousness, compelling individuals, institutions, and governments alike to pay close attention. This burgeoning curiosity is fueled by a confluence of technological advancements, evolving economic landscapes, and a palpable shift in how we perceive digital ownership and decentralized systems. The discussions are no longer confined to tech forums. They are happening in boardrooms, regulatory bodies, and everyday households globally. The journey of digital assets to this point has been characterized by rapid growth, significant milestones, and, admittedly, periods of uncertainty. As we navigate mid-2025, the narrative is less about whether these technologies will persist and more about how they will integrate into and transform existing financial structures. The questions have become more nuanced, focusing on scalability, security, regulatory frameworks, and the practical applications that extend beyond speculative trading. We are witnessing an industry mature, learning from its past challenges and striving to build a more robust and accessible future for all participants, aiming for greater financial inclusion and efficiency. The central question that many are pondering is Bitcoin a fleeting bubble, or does it represent the foundational layer of the future of finance, remains a pivotal point of discussion. This essay aims to explore the multifaceted developments that define the current state of Bitcoin by May 2025. We will delve into its recent price surges, the evolving regulatory environment, particularly in the United States, and the significant influence of political figures. Furthermore, we will examine the insights from industry leaders and the tangible adoption by major corporations, providing a balanced view of the opportunities and inherent risks. Looking ahead, the path is one of continuous innovation and adaptation. The digital asset space is dynamic, with new projects and use cases emerging at an impressive pace. Understanding this evolution requires a comprehensive look at not just Bitcoin, but also the underlying blockchain technology that powers it and the diverse ecosystem it has spawned. From decentralized finance, or DeFi, to non-fungible tokens, or NFTs, the potential applications are vast and varied. Our goal at Coinbase has always been to make crypto easier to use and more accessible. And this mission feels more relevant than ever as we chart this new territory. As we approach the midpoint of 2025, Bitcoin's price performance has been a prominent topic of conversation within financial circles and beyond. Around April 2025, Bitcoin was trading near the $83,000 mark, a significant figure that reflects a renewed wave of investor confidence and institutional interest. This price level is not merely a random fluctuation. It is indicative of deeper market dynamics at play, including increased adoption, perceived inflationary pressures in traditional economies, and the growing understanding of Bitcoin's unique properties, such as its finite supply. The journey to this price point has been marked by periods of rapid appreciation, underscoring its potential for substantial returns. Several factors contribute to these impressive price movements. The inherent scarcity of Bitcoin, capped at 21 million coins, with over 19.8 million already in circulation by early 2025, plays a crucial role. This limited supply, juxtaposed with increasing demand from both retail and institutional investors, naturally exerts upward pressure on its valuation. Furthermore, the development of more sophisticated investment vehicles, such as Bitcoin exchange-traded funds, or ETFs, has made it easier for a broader range of investors to gain exposure to Bitcoin, thereby expanding the investor base and contributing to liquidity and price discovery in the market. The task of forecasting Bitcoin's price remains a complex endeavor, given its historical volatility and the multitude of factors influencing its market. However, innovative research, such as the work being done by Dr. David Enke at Missouri S&T, is shedding new light on this challenge. By employing deep learning neural networks and analyzing vast amounts of blockchain data, including transaction details, trading addresses, and the activity of dormant versus active coins, researchers are striving to improve the accuracy of price predictions. This data-driven approach provides valuable insights beyond simple technical analysis, considering the fundamental on-chain metrics that reflect network health and investor behavior, which is critical for informed decision-making. Ultimately, while current price levels are encouraging, it is essential to maintain a long-term perspective on Bitcoin's value proposition. Market sentiment can be influenced by a wide array of events, from regulatory announcements to macroeconomic trends. Therefore, understanding the underlying technology, its adoption trajectory, and the evolving use cases is paramount. At Coinbase, we believe that informed participation is key, and we are committed to providing the tools and information necessary for users to navigate this exciting and dynamic market with greater confidence and understanding of its potential. The regulatory landscape for digital assets in the United States has entered a notably dynamic phase in 2025, significantly shaped by the current administration. President Donald Trump, having been re-elected, has expressed a clear intention to position the US as a leader in the crypto industry. This ambition is underscored by initiatives such as the launch of the dollar Trump cryptocurrency and a stated goal to become the first crypto president. A key directive has been issued to various US agencies, compelling them to collaborate on creating clear and supportive rules for the crypto sector, aiming to foster innovation rather than stifle it with ambiguity or overly restrictive measures. This proactive stance from the White House is anticipated to culminate in new, comprehensive US crypto regulations by February 2026. The development of this framework is largely driven by the Republican agenda, which appears to favor a more accommodative approach to digital currencies and blockchain technology. The expectation is that these forthcoming regulations will address long-standing questions around asset classification, market oversight, and consumer protection, thereby providing much-needed clarity for businesses and investors alike. Such clarity is crucial for encouraging domestic innovation and ensuring the US remains competitive on the global crypto stage. Currently, as of April 2025, the regulatory treatment of Bitcoin in the US remains somewhat fragmented, though evolving. The Commodity Futures Trading Commission, or CFTC, generally treats Bitcoin as a commodity, similar to gold or oil. Conversely, the Internal Revenue Service, or IRS, classifies Bitcoin as property, meaning that gains from its sale are subject to capital gains taxes. The Securities and Exchange Commission, or SEC, has notably not classified Bitcoin as a security, although it has taken that stance with many other cryptocurrencies. This complex tapestry of classifications highlights the urgent need for the unified framework President Trump's administration is pursuing. A particularly interesting development is the establishment of a US government strategic Bitcoin reserve. While the full details and strategic implications of this reserve are still unfolding, its existence signals a significant acknowledgement of Bitcoin's potential importance at a national level. This move could be interpreted as a step towards recognizing Bitcoin as a strategic asset, possibly for diversifying national reserves or for other undisclosed strategic purposes. It certainly adds another layer to the evolving relationship between the US government and the world's leading cryptocurrency, suggesting a deeper engagement than previously observed. The global momentum behind cryptocurrency and blockchain technology was vividly showcased at the Crypto Expo 2025, held just days ago on May 21st to 22nd at the prestigious Dubai World Trade Center. This event, headlined by DoTech, served as a significant gathering point for innovators, investors, and thought leaders from around the world. It underscored the increasing international collaboration and shared enthusiasm for the transformative potential of digital finance. The choice of Dubai as the host city was no coincidence, as the United Arab Emirates, or UAE, continues to assert itself as a leading global hub for blockchain innovation and a welcoming jurisdiction for crypto-related businesses. The UAE's commitment to fostering a thriving digital economy is further evidenced by its impressive market projections. The nation's cryptocurrency market is on a trajectory to reach an estimated $254.3 million in revenue by the end of 2025. This growth is not accidental. It is the result of proactive government initiatives, clear regulatory frameworks, and substantial investment in technological infrastructure. Jassim Alawadi, Chief ICT Officer of DU, speaking at the Expo, emphasized the transformative impact of blockchain and cryptocurrency, highlighting Dubai's strategic efforts to position itself at the forefront of this financial revolution, attracting talent and capital from across the globe. Events like the Crypto Expo 2025 are crucial for the industry's development. They provide a platform for showcasing cutting-edge technologies, fostering partnerships, and engaging in critical discussions about the future of digital assets. For attendees, it's an opportunity to gain first-hand insights into emerging trends, network with key players, and understand the diverse applications of blockchain technology that extend far beyond simple currency transactions. The vibrant atmosphere and the sheer scale of participation reflect a maturing industry that is rapidly moving from the fringes to the mainstream of global finance and technology. The UAE's proactive approach serves as an interesting case study for other nations. By creating an environment that encourages innovation while also providing regulatory clarity, the UAE is demonstrating how a country can effectively harness the economic potential of the crypto industry. Their efforts to integrate blockchain into various sectors, from finance to logistics, and their open stance towards digital assets are setting a high bar. This global perspective is vital, as the future of crypto will undoubtedly be shaped by a mosaic of international efforts, regulatory approaches, and technological breakthroughs, all contributing to a more interconnected and digitally empowered world financial system. Section 5, Industry Perspectives. Leaders weigh in on regulation and mass adoption. The dialogue surrounding cryptocurrency regulation and adoption has been significantly enriched by the insights of prominent industry leaders, particularly during forums such as the World Economic Forum discussions earlier this year in Davos. As CEO of Coinbase, I have consistently emphasized the unprecedented nature of President Trump's vocal support for the crypto industry. This endorsement from the highest level of US government is a powerful catalyst. I believe that the forthcoming US crypto legislation, expected by early 2026, will not only provide clarity domestically, but will also likely set a significant precedent for other G20 nations as they formulate their own regulatory approaches. Anthony Scaramucci, the founder of Skybridge Capital, echoed these sentiments, noting President Trump's clear pro-crypto stance, which was evident even during a 2024 Bitcoin conference. Scaramucci particularly stressed the urgency for Republicans to capitalize on this momentum and pass comprehensive crypto regulations before the current congressional term concludes in 2027. This sense of urgency reflects the rapid pace of innovation in the sector and the need for legal frameworks to keep pace, ensuring that the US can fully leverage the economic benefits while mitigating potential risks associated with this burgeoning technology. Beyond the political sphere, leaders from the traditional finance and technology sectors are also contributing vital perspectives. Jennifer Johnson, CEO of Franklin Templeton, highlighted the immense potential of blockchain technology for facilitating instant transactions and enabling sophisticated smart contracts which can automate and secure a wide array of agreements. Similarly, Donnell Dixon, CEO of the Stellar Development Foundation, pointed to blockchain's practical utility in delivering humanitarian aid quickly and transparently, as demonstrated by its use with the UNHCR in Ukraine. These examples showcase the real-world impact and diverse applications of the underlying technology. A common thread among these leaders is the call for clear, understandable, and adaptable regulations. Lesetja Kyanyago, governor of the South African Reserve Bank, emphasized the need for rules that foster innovation while ensuring robust consumer protection and seamless integration with traditional financial services. This balanced approach is critical. Furthermore, my own advocacy for making crypto more user-friendly remains a core tenet. For mass adoption to occur, as many predict, the technology must become as intuitive and accessible as the internet is today, abstracting away the complexity for the end user. Section 6. The Bitcoin Enigma: Scarcity, Performance, and Inherent Volatility. Bitcoin's design as a decentralized alternative to traditional fiat currencies underpins much of its appeal and its perceived value. It primarily serves two key functions in the eyes of its proponents: as a store of value, often likened to digital gold, and as a medium of exchange, facilitating peer-to-peer transactions without the need for intermediaries. One of its most defining characteristics is its inherent scarcity. The Bitcoin protocol dictates that only 21 million Bitcoins will ever be created. As of April 2025, it's estimated that over 19.8 million of these coins have already been mined, leaving a diminishing supply for future acquisition, a factor that fundamentally influences its economic model. This scarcity principle, combined with growing demand, has contributed to Bitcoin's remarkable performance over the years. Data indicates that Bitcoin has been the top-performing asset in 11 of the last 14 years, a track record that is difficult for any traditional asset class to match. This extraordinary performance has attracted a diverse range of investors, from individuals seeking to diversify their portfolios to institutions looking for an alternative store of value in an era of monetary expansion. However, this impressive upside potential comes with a significant caveat: high volatility, which has also seen it be the worst performing asset in the remaining 3 of those 14 years. The pronounced volatility of Bitcoin is an undeniable aspect of its current market phase. Price swings can be rapid and substantial, influenced by a myriad of factors including regulatory news, macroeconomic shifts, technological developments, and even social media sentiment. This volatility presents both opportunities for significant gains and risks of considerable losses, making it a challenging asset for the risk-averse. Investors must approach Bitcoin with a clear understanding of its price behavior and be prepared for potential fluctuations. This is why education and access to reliable information are so crucial in the crypto space, helping users make informed decisions aligned with their risk tolerance. Therefore, when considering Bitcoin, it's essential to weigh its unique attributes, its decentralized nature, its finite supply, and its potential as an inflation hedge against its well-documented price volatility. The narrative of digital gold resonates because, like the precious metal, Bitcoin is not controlled by any single entity and its supply is limited. However, unlike gold, its value is also driven by network effects, technological adoption, and the evolving regulatory landscape. Understanding this complex interplay is key to deciphering the Bitcoin enigma and its place in the future financial ecosystem, as we continue to build more robust infrastructure around it. Section 7. Corporate America embraces Bitcoin and blockchain. A significant trend that has gained considerable traction by 2025 is the increasing adoption of Bitcoin and blockchain technologies by major corporations. Earlier this year, at Davos, I shared my prediction that approximately half of the Fortune 500 companies are now actively piloting or exploring crypto-related projects. This isn't just a fleeting interest. It represents a strategic move by some of the world's largest businesses to understand and integrate these transformative technologies into their operations. The motivations are varied, ranging from leveraging Bitcoin as a treasury reserve asset to exploring blockchain for supply chain management, payments, and customer loyalty programs. The decision by these established companies to engage with digital assets signifies a major step towards mainstream acceptance. For many, Bitcoin offers an alternative store of value, particularly in an economic climate where concerns about inflation and currency devaluation persist. Holding Bitcoin on their balance sheets, while still a relatively novel strategy, is seen by some as a prudent diversification move. Beyond Bitcoin itself, corporations are increasingly drawn to the underlying blockchain technology for its potential to enhance efficiency, transparency, and security in various business processes, creating new avenues for innovation and competitive advantage. The introduction and growing popularity of Bitcoin exchange-traded funds, or ETFs, have also played a crucial role in this corporate and institutional embrace. ETFs provide a regulated and more accessible way for larger entities and traditional investors to gain exposure to Bitcoin without directly holding the underlying asset. This has effectively lowered the barrier to entry, allowing for broader participation and contributing to increased liquidity in the Bitcoin market. The availability of such financial products is a testament to the maturing infrastructure surrounding digital assets, making them more palatable for inclusion in diversified investment portfolios and corporate treasuries. This wave of corporate adoption is not just about financial investment, it's about recognizing the fundamental shift occurring in how value is created, transferred, and managed. Companies are exploring how blockchain can streamline cross-border payments, improve the traceability of goods, create more engaging customer experiences through NFTs, and even develop new business models based on decentralized principles. As more Fortune 500 companies publicly announce their crypto initiatives, it further legitimizes the space and encourages others to explore its potential, accelerating the integration of digital assets into the fabric of the global economy. Section 8. Beyond currency, blockchain's expanding universe of applications. While Bitcoin often captures the headlines, the underlying blockchain technology possesses transformative potential that extends far beyond its role as a digital currency. Its core attributes, decentralization, transparency, immutability, and the ability to execute smart contracts, are paving the way for a myriad of innovative applications across diverse industries. Visionary leaders like Jennifer Johnson of Franklin Templeton have consistently highlighted how blockchain can revolutionize traditional financial processes, enabling near-instantaneous transaction settlements and automating complex agreements through smart contracts, thereby reducing friction and costs associated with intermediaries. This efficiency is a game-changer for the financial world. The real-world utility of blockchain is already being demonstrated in impactful ways. Donnell Dixon from the Stellar Development Foundation has pointed to compelling use cases, such as the facilitation of rapid and transparent aid delivery by organizations like the UNHCR in Ukraine. In such scenarios, blockchain ensures that funds reach their intended recipients quickly and securely, minimizing overhead and potential for misdirection. Furthermore, central banks are also exploring its capabilities. For instance, the South African Reserve Bank under Governor Lesetja Kganyago successfully conducted a blockchain pilot that dramatically reduced transaction settlement times from a full day down to a mere 46 minutes, showcasing its power to modernize critical financial infrastructure. The rise of decentralized finance, or DeFi, is perhaps one of the most dynamic expressions of blockchain's potential. DeFi platforms are creating new paradigms for lending, borrowing, trading assets, and earning yields, all operating on open, permissionless blockchain networks. Non-fungible tokens, or NFTs, built using smart contracts, are also revolutionizing concepts of ownership and value, particularly for digital art and collectibles, ensuring creators can receive ongoing royalties. The potential applications are continually expanding, touching areas like intellectual property rights, dynamic ticket pricing for events, the issuance and trading of stocks and bonds, and even transactions involving digital land in emerging metaverse environments. This expanding universe of applications underscores that blockchain is not just a technology for finance. It's a foundational layer for a more transparent, efficient, and equitable digital future. Its ability to create trustless systems where interactions can occur securely without reliance on a central authority is profoundly disruptive. As developers continue to build and innovate, we can expect to see blockchain integrated into even more aspects of our daily lives and business operations. At Coinbase, we are excited to support this broader ecosystem, recognizing that the true value proposition extends to these diverse and impactful use cases that are reshaping industries globally. Section 9. The Path Forward. Investment Realities, Economic Transformation, and Future Projections. As we consider the future trajectory of Bitcoin and the broader digital asset landscape in 2025, it's crucial to approach investment with a balanced perspective, acknowledging both the significant opportunities and the inherent risks. Bitcoin has demonstrated its potential as a hedge against inflation, offering a store of value that operates outside traditional government-controlled monetary systems. It also empowers individuals with greater financial control, removing reliance on third-party intermediaries, which can be particularly beneficial for the unbanked or underbanked populations globally, facilitating low-cost international transfers and access to financial services. The advent of Bitcoin ETFs has further democratized access, allowing for easier portfolio diversification. However, the path of crypto investment is not without its challenges. The high volatility observed in many cryptocurrencies, including Bitcoin, means that while the potential for returns can be substantial, the risk of significant losses is also very real. Many digital assets are highly speculative, and some may ultimately prove to be worthless. Therefore, thorough research, due diligence, and a clear understanding of one's own risk tolerance are absolutely paramount before committing capital. It is essential for investors to look beyond hype and focus on the fundamental value, utility, and long-term viability of any crypto project they consider. Looking at the broader adoption curve, many experts, myself included, liken the current state of cryptocurrency to the early days of the internet. There's immense potential, but widespread understanding and seamless usability are still developing. Projections suggest that crypto could reach half the world's population within the next 10 to 15 years, but this growth is contingent on achieving greater regulatory clarity and making the technology far more user-friendly. The complexity often associated with managing private keys and navigating decentralized applications needs to be abstracted away for the average user if crypto is to achieve true mass adoption. Ultimately, the question of whether Bitcoin in 2025 represents a bubble or the future of finance does not have a simple answer. It likely encompasses elements of both. Periods of rapid price appreciation may indeed exhibit bubble-like characteristics driven by speculation. Yet, the underlying technology and the fundamental shift towards decentralization and digital ownership suggest a more profound and lasting transformation. The journey ahead will involve continued innovation, adaptation to evolving regulatory frameworks, and a collective effort to build a more inclusive and efficient financial system. The opportunities are vast, but they must be pursued with diligence, responsibility, and a long-term vision for the future.